Well, you all know the saying, this time is different. Well, I'll say this time is not different when it comes to earnings. Earnings have never gone higher during a recession, and we know that a deep recession is coming. But you see the analysts on Wall Street, they're paid to show rosy pictures on companies. So the image, actually, Gil, if you could show that first image, yeah, that's perfect. It shows that massively bullish estimates of these analysts are out to 2024. Reminds me of 2000 to 2002 when Wall Street analysts from Goldman Sachs, Morgan Stanley, and others all kept trying to justify why a major low had been reached in various dot-com companies. And meanwhile, the tech-heavy NASDAQ composite lost 78% from peak to trough, and that was the worst correction in its history. Now, I will say that this time is different regarding the long end of the yield curve. The Fed has never manipulated the long end. Now, it's been doing so by buying bonds. When COVID hit, they bought $6 trillion in mortgage bonds. So you could say this is a Ponzi scheme-induced real estate bubble whose ramifications are now being felt. The Fed is likely to continue to execute their yield curve control later this year by buying bonds on the long end. So they're going to suppress yields on the 10-year and longer as a strong dollar makes repayment of debt owed to the U.S. far more difficult. Higher yields also greatly hamper U.S. GDP. And furthermore, when the Fed has tried to shrink their balance sheet, they can only do so for a limited time before the market forces more QE. Given record levels of debt due to C-19 and its higher order effects, they will only be able to hike interest rates maybe 2 more times. The CME Fed futures is pricing in 2 75 basis rate hikes at their next 2 meetings, and that would bring the federal funds rate to 300 to 325 basis points. Now, we've got a number of important reports that are coming. You should watch for clues on the earnings front. Apple just said they will stop hiring until economic uncertainty is clear. Apple is a company that is always looking to expand their empire, so this announcement carries massive weight across the tech space. Google and Microsoft report on July 26 after the close. The FOMC meeting concludes 2 p.m. Eastern Time, July 27th. US GDP reports 8:30 a.m. Eastern Time, July 28th, and the PCE reports 8:30 a.m. Eastern Time, July 29th. Forecasters expect a strong CPI and PPI to boost PCE, which has held near 0.3% the last 3 months. And some of the bankers are estimating that the PCE is going to shoot up by at least 0.5 to 0.6%. Now, there's a lot of minefields, as you can see, that lie within these reports. And so what we're seeing right now is this bounce in stocks and cryptocurrencies is pretty typical for a lot of bear markets. Nothing goes down in a straight line. And if you look at the next slide, where you got this one here, Federal Reserve liabilities, they've got to grow exponentially to avoid a financial crash. So this, like I said, probably 2 more rate hikes, and then they got to probably put a halt to the rate hikes. And also, if you look at the next slide, you'll see that Bitcoin's market capitalization trajectory based on money supply growth. You can see that the year-over-year valuations of Bitcoin are highly dependent on global M2. So Bitcoin's market cap on a year-over-year basis topped in February 21st. When central banks around the world started to tighten. And on this basis alone, Bitcoin's $69,000 high set on November 10th, 2021 was highly suspect as central bank tightening had already been underway and it only intensified. The first signs that the Fed chair is going to move from dovish to hawkish, this, of course, past history, November 2021, he removed the word transitory on inflation, and this prompted VSI reports among numerous other reports that ensued to basically say that we're going to have headwinds. And then by December, it was all about moving to the sidelines. I mean, certainly don't hold long positions, or you could profit from the earliest stages of the bear market via the market direction model or by way of shorting stocks. Dead bat bounces can be fierce. We've seen Ethereum have a couple of these in 2018. And both exceeded 50% despite Ethereum correcting 95% that year. The recent parade of horribles, including the 9.1% CPI and elevated core, well ahead of expectations may have caused a pile of shorts to load up, while a hot CPI in June caused the markets to flush and Ethereum to plummet nearly 50% over the next 9 trading days after the CPI on June 10th was reported. July's CPI report likely resulted in a short squeeze due to seller exhaustion, along with the shorts piling in. Part of the bounce is also based on the hope that inflation has peaked, which would give the Fed room to only hike by 75 basis points when they conclude on July 27th. Keep in mind that 75 is historically massive, and they're definitely going to be doing this again. But that said, expect at least one more down leg, at least one more down leg. We don't know how many, but I would not be surprised to see everything roll over and retest lows before the market finds a major low. And one clue over in crypto land is that in Bitcoin, you see a lot of retail buyers. It's all the retail guys are buying this bounce, but none of the whales. But if you look at the prior major lows of Bitcoin since the start of 2021, whale buying always preceded large rallies in Bitcoin. So we're not seeing whale buying yet, and I think that's a very important metric. So at any rate, given the macro backdrop, S&P could correct 50% from its peak or even worse. And this would imply a Bitcoin correction of at least its typical 84 to 87%. That would put it around 10 to 11,000. And the chain reactive effects of minor and long-term whale holder capitulation could create a wick down situation where Bitcoin goes well under 10,000, much as it hit $150 in January of 2015 before bouncing back above $200 the same day. Gil, how are you seeing everything?
Yeah, I think that the market was positioned sentiment-wise, also positioning-wise, positioned for what's basically a bear market rally. Just as an aside real quick, I noticed the GBTC is running right into the 50-day line. So it's possible maybe that becomes a short point. You could play it using the BITI, the BIDI, which is the inverse Bitcoin ETF. Interestingly, this came out right at the bottom, so it may be at least the near-term bottom, so it's probably a contrarian indicator, kind of like the 2 Bitcoin ETFs that came out right at the very top. So in any case, what I've been tracking is if you look at the AAI, American Association of Individual Investors Bears Index, what's been interesting lately is the market, if you look at this, basically you've been hanging around these lows, and now you're trying to rally up to the May-June highs, and that would be the top of the current bear flag. So if we look at this, you can see that even though the levels of this have been elevated for the last 4 weeks, you still haven't had much of a rally. Now today, or the last few days, you're starting to get one that's a little bit more substantial than what we've seen. So it's very interesting that I've never seen, this is actually the most bearish reading on this number since 2008, 2009, believe it or not. And I've never seen sentiment stay that bearish that long without some kind of a rally. If we look at the NAAIM, the National Association of Active Investment Managers Exposure Index, you can see that they have a net long exposure of 26.74. That's just above where they were at the bottom in March of 2020 at the height of the pandemic, or at least the height of the pandemic market fears. So what's been interesting is you've been down around this level and down in the 30 level or lower for the last 4 weeks, and yet we haven't seen a big rally, which is a very interesting phenomenon. And it makes me wonder whether what we're looking at here is that, okay, maybe this money is not stupid, it's smart, and it's positioning for another leg to the downside, as Chris was talking about, and so it's just hanging out. So we'll see how far this latest move carries. There's short interest is not terribly high on an index basis. On an individual stock basis in certain areas of the market, like the Ponzi stocks, the infinite PE in a so-called innovation stocks, like Beyond Meat, so for example, because they're an innovator, right? They make fake meat out of canola oil and pea meal, which is very innovative, and I guess. But that had like a 43% short interest, and they've been running that thing up. So I think that's basically what you got going on here. So if you can play it, you can try and play it. It's not necessarily that easy. Chris and I were talking before, and I was pointing out that, it's easier psychologically right here I'm not really all that psyched to go long Netflix, but it was easy to get short and short it yesterday afternoon when it jacked up to 224 and then rolled over in the 620. And then this morning it just boom, breaks all the way down to the 200 level. And then you're rallying again as the market continues to rally. And they're basically pushing everything that's a high PE or infinite PE stock, which tells you that FOMO is back. But how long FOMO can be back, given that so much wealth has evaporated? And the retail investor, may be flailing here. As Chris was saying, Bitcoin is mostly seeing, well, entirely, right, Chris? It's pretty much all retail buying. So they're all flying in here. And my guess is you're probably seeing some of that here in the market with the stocks. And so if we look at what's going on here, I will refer to my HES Investor ranking module. If I look at my groups, as you know, I keep different groups. I build my own groups. So I have a crypto group, and each one has an index. So if I have 10 or 20 or 40 stocks in the index, in the group, it will calculate an index or an average basically for the entire group. So here we can see crypto is really leading. I don't know if you can see these numbers, but for the week, it's up 25.12%, my crypto group, based on the index of all the stocks in that group. After that, you have the IPOs from 2021 are up there, and they're up 9.95. So trailing quite a bit the crypto index. Cloud leaders, a lot of those are infinite PE names. That comes in number 3 at 8.31%. And this is for the week so far. So that's basically just the last 2.5 days. Ponzi stocks, these are stocks with infinite or extremely high PEs. They're also pushing. Solars are in there. Oils are coming up a little bit off the bottom, not terribly so. Surprisingly, semiconductors are up 6% for the week, but they've been a big driver of this rally with the new CHIPS bill that the Senate, I guess they voted on it last night and they passed it, but I think it's got to go to the House or somebody, I don't know. But we'll see how that goes. But, $52 billion giveaway to the semiconductor industry, just so we need more helicopter money. And of course, it does its work and it gets the group revved up on the upside. If we just take a look at my groups here, we'll go to semiconductors. I'm just going to look at the semiconductor leaders. And you can see today, NVIDIA, which is the one that Nancy Pelosi, Speaker of the House, Nancy Pelosi's husband, bought $8 million worth of this about 3 weeks ago. Coincidence? I think not. But, corruption today is at the highest levels and the media ignores it and everything's okay because they don't indict themselves. But from Biden to Pelosi and everyone in between, there's a lot of this kind of garbage going on. And, we see all the revelations now with Hunter Biden and the fact that Joe Biden did, in fact, meet with him several times about his business dealings. So he lied. But, should that be a surprise for a 50-year career politician who's done nothing in his life but live off the public dole? In any case, there's NVIDIA for you, the Pelosi special. And I guess you could have taken that. We got news of that, 3-4 days ago? You could have taken that as a buy signal, and you would have actually made money. Now they're trying to push it through the 50-day line. You did post a pocket pivot yesterday. Notice the day before on Monday, you did have a reversal at the 50-day line. So it actually worked out as a short there. And then the next day, the market completely forgot what it did, mainly because all of this bearish sentiment and bearish positioning got some publicity from Bank of America, which came out with a report on this yesterday morning, and that helped trigger the rally. So, I view this all as pretty much normal stuff. Seen it before. The junkiest stuff rallies the hardest. Whether you can play it or not is another question. The semiconductors are not junky stocks, and they're rallying pretty well, but they're the ones who've been beaten down the most as a group, I believe. But you see names like Qualcomm, it's pushing up towards the 200-day line. We'll see if that's resistance. For the most part, coming off the lows. But if you look at most of these patterns, you are sitting, in a lot of cases, still in bear flags. You look at Western Digital, for example. So let's cycle back. Texas Instruments rallying up into this area of potential overhead congestion. And again, this looks normal to me. This is what bear market rallies look like, and stocks will move that much. So if you can find a way to play them, then you can do so. You could say that here's an undercut and rally move on TXN off the lows that you could have played, but it's dicey because there's a lot of landmines in terms of headlines that could hit. China could invade Taiwan. You could have Russia shutting off the natural gas, the Nord Stream, to Europe, and there was talk of that over the weekend. And then yesterday, I guess they said that they were going to resume on Thursday, and the market that contributed to the rally. And then this morning, you might have noticed that the Europeans were saying that the Russians saying that they have some turbine or something, and the pipeline there is out, and so they can't pump that. That's an excuse for cutting them off. So the futures were down. You might have noticed that in pre-open at around 4 a.m. my time. So then when that's kind of dissipated and Putin came out and said, no, they're probably gonna start pumping again or something like that, then you saw the futures recover and we get what you have right now. And that's essentially what you're looking at. So in terms of playing it, you've got to understand undercut and rally moves. But even then, I've looked at some, and I played some of them, but it's really hard to really get into the teeth of it in terms of playing a big move, because they tend to be choppy. And let's just look at like Ponzi stocks, for example. Let's go to my Ponzi stock. You can see some of these are having huge moves. Carvana is an infinite PE name, but if you look at this move in the grand scheme of things, and it's having a 16% move today, but in the grand scheme of things, what is it really? So, and how do you play that? You're going to go long this thing here? I don't think so. Unity Software is having the second biggest move, and look where that is. This gives you some idea. So they're so beaten down that they can rally, and what happens is that the rallies get exaggerated because, as these stocks come down, and they come down, from 200 to 40, a 10% move is 4 points, and they can get it running pretty good. This one's up today. What is it showing here? Up 5.75 points. That's a pretty good move for the stock. So 16.13%. So that's basically what's going on. And so, there's nothing really to get yourself worked up about if you can play some of them. I kind of thought Coinbase might have been playable. You had a pocket pivot here. So that would have been right here. And then notice that kind of fizzled out. It drops below all the moving averages, but then you come back up. Here you run into resistance at the 50-day line. That was Monday, and that was shortable. And then yesterday you post a pocket pivot at the 50-day line after bouncing off the 10 and 20. So if you're really focused on 4 or 5 stocks like this, you might be able to trade them, and you might be able to trade them in both directions on different days. And that's really what you're doing now. You got Coinbase is running up 15.75% today. It's up $7. That's a pretty good move. And, if you're nimble, I suppose you can play it. But the question is, are we going to get a long-term trend or an intermediate-term trend that carries all the way back to the highs and starts a brand new bull market? I just think you're seeing natural rallies in these things off the lows. And so, a lot of this, you can trade it, but are you going to make big money? How concentrated can you go in? Would it make more sense to just sit back and wait for potential short sale entries? And of course, you can always probe things, on the short side. And let me just cycle through this really quickly. You see that Confluent, that's a big move, 13% today. But where is it really? And does it just end up like this move here? You had a nice big move there, and it goes up a little bit more, and then it rolls over. And my guess is a lot of these are going to look like that in the next few days. Peloton, that's so far beaten down. Was a single-digit stock, so it's coming up off the lows. If you think an infinite PE stock like that is going back to the highs, go for it. But I think it's very tricky, and it can also be very dangerous. So, in a situation like this, I just lay back and kind of let it play out and just see if and where and what I want to go after when the time is riper. And right now, obviously, the short side doesn't necessarily seem to be all that ripe. Although Netflix was good this morning, last night and this morning for a good scalp from the 220 level down to 200. Now it's back above, right now 214.97 I'm looking at. And, that's basically an intraday trader at this point. Here's Lee Odyssey. Here's the Chinese names we're trying to come back. Last week there was some baloney out on FinTwits or something that we were in a new bull market and it was being led by Chinese stocks. This is probably the only one that looked to me anything like a leader, but when people get delusional, I suppose anything works. but you'll notice it's starting to fail at the 20-day exponential moving average. And whoop, I didn't want to do that. I want to shrink it. And you can also see that you do have a breakout here that may be failing. And then if we back out even more, you can see a giant kind of, it's not really a punch bowl because it's not a fast move down and back up, but it's double topping on that basis because you're approaching the prior all-time highs during the middle of the pandemic bubble move. So, now you may be topping out. This may be a potential later stage failed base short sale entry. So this, I'll look at some of these and possibly trade these because I can figure them out, but it doesn't necessarily have to work. Let's see here. Some of the other infinite PE names like, and so if cycling through this, you can see this is what's leading the market. Okay, one of the areas, this in crypto. But overall, where are these things in their patterns? They're still coming up off the lows. If indeed a new bull market is starting, then you got plenty of time to figure it out as far as I'm concerned, because you're not playing for a few days move, a 1 week move, unless you're going to try and swing trade them. But for the most part, you can see all these stocks as I cycle through these charts. Where are they really? Some of these, CyberArk, this may be in a short sale position. It's been there twice. Well, we could say 1, 2, 3 times before, and every time it's rolled over. Does it do it again? I guess we'll find out soon enough. But they get them going. You get it looks like just a 5-day pocket pivot yesterday at the 10 and the 20. But they're moving. So obviously, if you're trying to short them, you're just going to get pushed out. And sometimes you're better off just kind of hanging back and just waiting, because things will ripen up. And when it feels easy, that's probably the time when it's going to work. You'll be trying to force things on the short side, because after a bear market of 7 months, roughly 6-7 months, you're pretty well conditioned to expect everything to go down. Okay, and what happens is it'll fool you because it doesn't go down anymore. And then once they start turning on you, you have a hard time getting long, and you want to short everything just because it's sticking up for 1 day. But a lot of times you have to be patient and just wait. It's pretty typical. So understanding that we are 6-7 months into a bear market, you can go back and study the bear market of 2008, 2009. After we peaked out in late October 2007, we started to turn in May, I think it was. If you look at the bear market of 2000 to 2003, in the June of 2000, we turned. That was pretty quickly off the lows there, and had a follow-through day. Bill Neal thought that it was a new bull market, just like the new bull market that started in 1962 after the Cuban Missile Crisis. For those of you who remember that, I think I was 2 years old or 3 years old at that time. In any case, yeah. So this is normal stuff, and I see you all have tons of questions, as in zero. But whatever. It's that way too. It's not really a market where I think there's a lot that you need to concern yourself with yet. You just hang back and let things do what they're going to do. And at some point, the rally will give up, and you will come back in on the short side potentially, unless there's some exogenous factor, which maybe isn't so exogenous if it's the Fed going back to 0% interest rates. But I think the next time they do, you're going to create a lot of weird stuff. So anyways, what else in here? If we look at big stock NASDAQ names, you can see, Alphabet, they split this thing 20 for 1. So now you're hanging in here. You're in a bear flag, so you're nothing doing there. Amazon is still in a bear flag, even though it's poking above the 50-day line. But notice how, and this is one of the reasons why it's hard to get too excited. This is a 5-day pocket pivot on Monday, but you'll notice it's stalled out, so it looked more like a short. And then you get low volume. I'm sorry, that would have been last Friday. You get low volume Monday and low volume on yesterday, and it's moving higher. Now today you're projected to trade above average volume, but where's it at? You're not going to jump in here. So it's really hard to jump in here. There is no undercut and rally anywhere along here, so there's none of that. So, it's just moving up. It becomes sort of an everything rally. You can almost throw darts and make money at least for a little while. So that's basically what we're looking at. Apple is pushing higher. That's everybody's favorite. When the market goes up, it goes up. But note that if we look at this, You're just pushing up towards the 200-day line, and it looks like that if it did do that, that would be a 50% retracement of this decline, roughly. I don't know. I'll have to check my math on that, but you get the idea. So, I mean, that's where you're at, you know. So where are the buy signals here? I guess you could have come in, and we probably talked about this. There's an undercut and rally here. And then the day that it retests that, it's trading much higher volume, and things don't look so appetizing. So it would be very difficult to hold, because essentially triggering a short sale entry here at the 20-day line and then at the 10-day line, but it holds, and then we edge higher, and then you're going to notice that there's really no volume here. Okay, so there's no institutional accumulation. You might have no buyers, or I'm sorry, no sellers. In other words, you've washed out all the sellers. There's really no buyers, but there's on balance more buyers than sellers, and that's what drives it higher. So, you know, volume isn't necessarily a factor, and I've noticed in this market, volume a lot of times doesn't really tell you anything. A big up day on big volume a lot of times just fizzles out, and that's pretty much it. Let's see, tonight. We had Netflix last night, so we've got. And so let's just go through some of these big stock NASDAQ names. You can see most of them are in bear flags, and so they've rallied off the lows. They're decent little rallies. If you can catch them, great. But they've done it before, as you can see from the chart of Meta Platforms, formerly Facebook. And of course, we also have semiconductors getting some mileage from the CHIPS bill. As if we haven't, you know, as if we haven't spent enough money we don't have. We're going to give away money to chip companies. And even Intel stated that if the bill did not pass, they would not be able to build their new plant. I think in Texas or somewhere. But if they can't build the plant without government welfare, corporate welfare, then maybe it's not worth building the plant to begin with. But the whole thing is it's basically a national security issue. Everybody knows that. It's all over the news because we got to maintain our supply of chips. But who's going to supply the dip? That's all I want to know. Anyways, Tesla reports after the bell. We'll see what they do. But if we look at Tesla, what is it really doing here? Well, it's way off the peak, okay? Beaten to a pulp. It's in a bear flag. You're kind of in a triangulating pennant formation like that. So maybe, you know, does it resolve to the upside or does it resolve to the downside? I think we'll probably find out after hours, and that may be a factor in where the NASDAQ goes. Of course, then we've got all the big stock NASDAQ names like Apple, Microsoft, Google, Amazon next week, heading into the end of the month. You can see Microsoft got pummeled last week on news of declining PC sales, and that's a factor, I think. But yeah, where are you going now? You're rallying back up to the prior highs of what is a bear pennant or a bear flag, and I'm assuming that this won't really truly resolve itself until earnings are out. So I think my main message here is that don't let your boxers get into a bunch here. Just if you think you can play some of these trades, go for it. You know, if you know how to play them using a 620 chart, or you can do another thing I like to do is just use the ETFs long and short as the market moves. So today you've got some movement. If we look at, let's go over to this area here. So if you look at something like the SQQQ, for example, you can use that on the short side, but you can also use this on the long side, right? So it's set up this morning. You know, we were heading down. This is where the news came out that Europe doesn't trust Russia, and they're using the busted turbine as an excuse to cut off their gas supplies. And then Putin came out, and you did get you can see here you got a moving average cross along with a MACD cross. So you could have gone long here just above 2840, say about 2850. And you can participate in this move that way. Now, if it fails, obviously you can, if you're long that and you see it start to fail on the 620 chart, then you just flip over to the SQQQ. The same thing can be done with the SOX S and the SOX L. And frankly, for me, this is an easier way to play this because semiconductors are moving uniformly. Big stock NASDAQ moving uniformly. They're all correlating together. So why worry about individual headline stock risk when you can just play ETFs? So if you think, you can see that the semiconductors The SOXL was coming in along with the SQQQ. It pretty much correlates to it. You get a little more juice out of it, I think. But you can see how you got the moving average cross here, you got the MACD cross there, and you could go long. So if you're watching for this kind of stuff, yeah, you can play it that way. Now, as this gets extended, you're noticing that the SOXL is starting to come off a little bit in a double top. You have also gotten a MACD cross to the downside. The moving averages, however, are holding up in a bullish configuration, meaning that the 6-period line, the orange line, is above the 20-period line. So pretty simple stuff, and it's an easy way, to keep things uncomplicated, and you can play the volatility using these. And if this starts to poop out, then you go to the SOXS, which looks to me like it posted a MACD cross here, but basically that just marked some price lows, and it seems to be holding there right now, which corresponds to the resistance on the upside in the TQQQ. So pretty simple stuff. If you're watching financials, they've been moving pretty hard over the past few days, and we can see on the daily chart there's the movement, but notice that the XLF is now at the 50-day line. So that may put it in a shortable position. So if I generally don't like to mess with financials much at all, but you can see here the FAZ, the FAZ, is trying to post a couple of buy signals. Here's one, but that didn't really work out. And here it is again below. That's a sell signal, so you'd be out of there if you bought this. Basically, it's a wash. But it could set up again with the XLF sitting at the 50-day line. So you can watch things as they move into potential moving average resistance. So moving average resistance on the XLF is the 50-day line. So what I'll do is I'll watch this for a long entry signal, because it corresponds to the XLF being at the 50-day line or 50-day line resistance. That makes sense to you? It's a very simple approach here. You can also use the SPXU or the SPXL on the long side. Same thing, but they'll mostly tend to correlate. The UVXY is its own little beast, because yesterday it's been holding above a long entry signal that occurred, I believe, let's see, this is 7/19, so that would have been yesterday. So yeah, if we look at this, it's very interesting. On Monday, you had a long entry signal in here at about $12.30, $12.30 roughly, and it ran up, nice move, so that was playable. And then it posted a sell signal in here, and you could have bailed out and taken your profit if you want to trade it. But notice it never dropped overnight. It dropped down to 2040 and just back to where it started the prior day, and it was actually, I think, flat yesterday roughly, and then it moved higher yesterday, and it pushed around and slightly up for the day. Okay. And then it comes in today, but still holding above those levels. So really, where are you at? You're just hanging along these lows, and it's not really correlating as much as, say, the SQQQ, TQQQ, SOXS, SOXL, SPXU, SPXL pairs. So that's basically how this will work. Sometimes you'll see the Dow will be up, or the market will be up, and it's not moving a lot. The market will be flat, and it's going down because there's no fear. So it's really a different kind of animal. And the one thing to keep in mind about this is that in a bear market, do I have a weekly chart? Yeah, here we go. So I'm just going to use the SPY here. What we find in bear markets is that you will have, I'm just going to blow this up. You'll have several legs down. So if we look at this on the S&P, you got one leg here. And I think I would say, is this two legs down? No, I mean, to me, this is kind of one leg down, because you're staying below the 50-day line. Now you rally back up. Now you got a second leg down, and I consider this all the second leg down, and because you're still staying below the 10-week line, in my view. So I mean, that's just the way I count them. You can count them however you want, but this is the way I do it. And so what I've noticed is that the third leg down will be where the VIX will spike, third or fourth leg down. So that's when you really want to be watching for a potential entry that puts you in a position for a spike like that. Now, I don't think you're necessarily there right now. Probably not by a long shot, and maybe not until the Fed acts next week. But right now, it looks like you've completed the second leg down. You're pushing through the 10-week line. And the next move, wherever that could occur from these highs, it could get as high as the 40-week line. But notice the 40-week line could come lower, so it eventually ends up doing that and runs into resistance along these highs and these lows over here, this axis line here. And that's where it rolls over. So you can be watching for that. And that's basically what you're doing. The trick here is being patient. And if you want to test signals, yeah, you can do that, but just be quick. If it doesn't work, don't let it turn into a big loss. Just bail out. That's the beautiful thing about the stock market. If you buy something today, you can sell it today. So I always remember that stupid commercial where they have an art auction and the guy buys a $2 million painting, and then as soon as he buys it, they say sold to the man in the back or whatever, and then he sends him, he says, oh, I'd like to sell that now. And the voiceover says, well, you wouldn't buy and sell artwork. Why would you buy and sell stocks? Well, because you can. Artwork you can't sell because it's mostly an illiquid market, whereas stocks are very liquid, and you use that to your advantage. And that means being able to test things, and if they don't work, you back away very quickly and try not to get into a lot of trouble. So, that's the beauty of the stock market. You can buy and sell things several times a day if you want. It's not like art. So I thought that commercial, the whole premise was just stupid, and it shows you that people who do advertising for a living are mostly stupid as well, but we already knew that. Anyways, any questions? I don't see a single question. I don't have anything I'm going to pound the tables on in terms of a long entry here. I don't see anything I like. I generally, if things are moving higher, what I want to do is watch for pullbacks and see if they set up. So what would be a good example here? Let's look at well, like these Ponzi stocks, if you were looking at that, I noticed not Unity Software, but Coinbase is one I've been tracking. And you can see here, like I said, I mean, God, that looks like garbage. Let's see, let me try something different here. Different chart, scale it a little bit differently. HGS, because things are so far down, it tends to flatten things out. But you can see here, yeah, this shows it much better. Basically you get some percolation off the lows. Okay, yeah, but it doesn't really go anywhere. And you notice in here you could be watching it, and then this looked pretty good until it all reversed at the 50 down. So it actually turned into a short. And then yesterday it found support at the 10 and 20-day line. So if you're following this on the 620 chart, I'm just trying to give you some ways you can work around things if you want to do this. I don't necessarily advocate that you try and day trade right now in mass, because I think you're still in a funky position here with the market. But you can see yesterday, if we go to, this would have been 9/18. So let's go Monday. You had the big move into the 50-day line, okay? And then you had a couple sell signals in here. Finally, it broke here at 62, and you got a decent little short out of it. Nothing big, but it was a short and came all the way back to the 20-day line. So the next day, that would have been yesterday, right at the open, it breaks down again. But you'll notice that when it came into 58, what happened? Well, 58 is roughly where the 10 and the 20-day line are. So you know that could work as moving average support. And then what happens shortly thereafter is you get a long entry signal just above 59, and you're off to the races. So you could come back into it here using the 20-day line as a selling guide, or the 10-day line if you want to do that, or a sell signal such as this here on the 620 chart. In this case, you would have taken your profit, which is good for a pretty good move there. And it did go a little higher, but not that much higher. And then opened up there, let's see, this morning, it opened up right around there and pushed higher. So again, it was off and running, and so it's possible to play it that way. It's tricky though, and you also have to be focusing. You have to be laser focused on the name that you're interested in playing. Okay, so my recommendation is if and the way I'll do it is I'll try to pick 4 or 5 stocks I'm going to watch during that particular day. It's a day trading sort of method, and actually, it's if you read a book, One Good Trade by Mike Bellafiore, this guy I know, he runs a day trading outfit in New York City. At least he did. Don't know if he still does. Haven't heard from him in about 10 years, but he basically talks about how they approach day trading. and they're focusing on the big stocks of the moment. And, like Livermore said, but the stocks that might be moving on news could be earnings. Okay. And we're in the middle of earnings season. So you got Netflix has got all sorts of stuff going on yesterday and today. You had a nice move yesterday. It wasn't something I was going to buy, but last night, they had the big spike, and that spike took you all the way up to a high of 225. And I saw that, so I put some out short about 217, and this morning it just broke lower, and then it bottoms out. And a lot of times, if you catch a trade like that and you've got 7, 8, 9% instantly, you got to watch for these long bars on the downside and the big volume, because usually that's where you kind of exhaust. The second one comes in here down to 200, kisses 200, the volume's lighter. Then you get a MACD cross here, and you can just bail and take your profit, and that then turns back to the upside. So also, you could theoretically have gone long. For me, if I play something like that short and get a profit like that, psychologically, it's often very hard for me to go long, even though it's pretty much all the way back. It's close to the highs of the close of yesterday's after hours session. And maybe it tops out here, so maybe it becomes shortable again here. I noticed another one that's moving in sympathy. So whenever you have earnings moves, you'll get sympathy plays. So Roku is a sympathy play to Netflix, and you can see what is that doing. Well, it's pushing up against these highs, which are in the 98 to say 100 area, maybe a little above it, 101. And volume's pretty good right now. It's pushing up to these highs. So you're actually pushing up to the highs of a bear flag, right? And so as it approaches those highs, I'm going to watch this, and it's on my list. Netflix. So names I'm focusing on today, I'm watching Netflix, I'm watching Roku, because they're moving on Netflix earnings. So they're in play today. So like I was saying, if you read the book, One Good Trade, and I do think it's a good book. I mean, anything about trading, especially active trading, gets me excited. So I really like the book. But I thought just the way they outline their basic approach, which is to focus on a small handful of names on any given day and watch them like a hawk. So that's really the thing to do. So like Netflix, I'm watching Netflix, Roku, the financials, XLF into the 50-day line, Bitcoin into the 50-day line, and also the SMH and the semiconductors. So using the SOX-S or the SOX-L, mainly because the SMH is a bit extended at this point. Great move off the lows. Some of it was tradable, but you're past the 50-day line. You're pushing up towards that. So I'm just going to watch that. I haven't done anything with it, and watch the SOX-S and the SOX-L. So like I pointed out earlier, you could be long the SOX-L based on the 620 chart. And now you have the SOX-S maybe trying to push a long signal, but it's not really clear to me right now. But getting back to Roku, so I hope I'm making some sense here as far as an approach for this type of environment that we're in right now, a bear market rally. But it's got some thrust in it, and it doesn't really want to die. So you see Roku's just hanging up there. And one of the things, I don't necessarily just short a stock because you have a MACD cross, although you could have right there close to 98, and it did come in a couple of bucks. Now you're just chopping around. If it comes in like that, so let's say if I short something on that basis here, and it does work right away. Okay, the next thing I want to see is I want to see it bust the 20-period line. A lot of times stocks will come down through the 6-period line. They'll test the 20-period line, and they'll hold. And if it holds, sometimes just scalp it, take a buck or two, and then wait to see if it sets up again. And now if you're watching this, you'll see that the two MACD lines are basically flush with each other, and doesn't really look like it's decisive one way or another. So it could set up here and go higher. That's a possibility. So you'd also want to keep an eye on Netflix, although Netflix looks to me like it's pooping out up here. We'll see. But this probably correlates to Netflix. And so that's one name I'll focus on. Probably this evening, I'll be focused on Tesla into tomorrow. And then, of course, what that does, Tesla also brings into play the electric vehicle space. So I go to my EV group. Here it is. And, look at Workhorse. To me, this is the biggest piece of junk on the planet, but it's a $3 stock. Now it's pushing for $4. That's a pretty good move. But that's what's happening, and they're an infinite PE stock. So, I think you got retail money pushing that, but Tesla is going to have an effect on this group. Here's charge point trying to push a pocket pivot through the 50-day line here. It's extended though, in my view. Well, no, it's extended in anybody's view. But you can see what's happening here. So some of these names may come into play in sympathy to Tesla. So if Tesla's numbers suck, then maybe this group breaks, and maybe there's some names you could pull out of here to mess with. I would probably tend to go with Tesla since it's the most liquid. You got the lithium names as well, which might be sympathetic, and some of these are pushing up towards moving average resistance. And that's basically it. Okay. So, in a nutshell, that's kind of a way to approach the market if you want to be involved. I don't think you need to be. I think you just hang out and let things do what they're going to do. So, somebody says, is there any potential play? Watch this for recession idea. No, why do I need that? That's too macro. You don't need a recession idea. I mean, if we go into a bad recession, then what's likely? Common sense, you believe it or not, common sense is very useful in the markets. I know people don't like to use common sense. They want to think that things are more complicated than using common sense. But common sense, as Bill O'Neill used to tell me, it will take you a long way in the market. Just apply it and use your brain. People don't like to use your brain. What do they say, Chris, that we only use 20% of our brain's potential? I would say, based on some questions I get, how much?
It's pretty low. It's like 6 to 10%.
Yeah, okay. So some people out there, some of the questions I get is they think they're operating on 2%. But I mean, think about it. In a recession, okay, well, what groups, will get hammered? Retail? Well, they already got hammered, So trying to say, oh, we're in a recession, therefore I should short this group of stocks, or let's go after this now. I mean, the patterns will tell you what's happening. And the bottom line is, if we're moving into a recession, you should have been short the stocks, the retail stocks, a long time ago. Okay. So there's nothing now. I mean, just look at the charts, use some common sense, and you can answer your own question. And I merely harangue on you because I think that you're just being lazy. Okay. And I'm encouraging you to think more about, number one, basic idea. If we're going into a recession, the market's going to discount it in advance. Okay. It's not going to be coincident. And what groups would be affected by a recession? Well, as it turns out, since we've been in a bear market, every group has. So it's not like you can say, oh, we're in a recession, so there's going to be groups that are going to go down. A lot of those groups have already gone down. So that just throw that idea away. You don't do this sort of top-down thing where you come up with some concept, like the sky is blue. So, companies that operate in blue skies, maybe I can go along them, or, stuff like that. So, just I'm not being mean or anything. I'm just being forceful in my response, because I think the question just kind of begs the idea that you're not really thinking, okay? And I'm sure you're fully capable of it. We all are. And I think that's one of the problems with a lot of people, is that they don't really understand how much power they do have, how much capability they have just by thinking things through and using common sense. So, and also understand always that this top-down approach doesn't work when the market's already discounting things that are obvious, such as a recession. Okay. So anyways, that's all I've got. You got anything else, Chris?
Just want to leave with, this Fed move to halt the rate hikes. When they've done this in the past, that's a big green buy signal. And I mean, certainly if the markets are way off and they do that, that's great. However, markets are trickier than that. And just because it's happened every single time in the past, I think that there might be a danger of more and more people recognizing this trend, this tendency, and markets are forward looking. So maybe we get the start of a new bull rally. I wouldn't say it's a amazing bull rally, but let's just say maybe the market puts in a major low on the day of the second rate hike. So that would be in September. Maybe that is the ultimate low, because I know at that point people are going to still say, well, we still have to wait for the Fed to say that they're going to halt rate hikes. So I'm keeping that in mind. Markets are rarely super simple. And so I think everyone should keep that in mind. It's not as easy as a big green buy signal because the Fed went on hold, or they started printing again. And as far as the printing, I really think that's probably at least a year off, just because inflation is so high and they have to get it down. It's going to take it's going to take the next two rate hikes and then a holding position for a while. before we start to see maybe inflation coming down a bit. On the other hand, I think we're going to see more emergencies that come up, and if history's any guide, so we're going to see at some point the Fed, let's say we get a sideways market in for good part of, say, last end of this year and then start of next year. Well, it's very possible maybe the Fed will find a reason to start printing money again, because they really have to. They can't have a strong dollar, and they've got to really they've got to do something. They can't just sit on their hands and keep rates steady where they're at, say, after the second hike. So these are all just food for thought, and yeah, just be aware of all these ramifications, all these things that can play out.
Yeah, a lot of possibilities. And so that's why I say if you want to try this day trading approach that I outlined, you could try that. Maybe it works out as something more and it helps you get into position for a bigger move. But otherwise, keep your powder dry and be selective and hang out, be patient. Anyways, that's it for now. Thanks for showing up, you guys. We will catch you next week. Take care.
So long, everyone.